What happens when you combine a sharp price surge with a consolidation? You get a golden opportunity to make a profit in just a few moments. Every time I spot this setup on a chart, I know that I can instantly secure 2 winning trades. And if you use this strategy correctly, you can get the same. Are you ready to hear it out? Stick around, and I'll explain you in details my trading strategy. The double impulse. Here's what we are looking for. A sharp price move in the direction of the global trend, followed by consolidation or the formation of a continuing pattern like a triangle. The most important thing here, the price must break out of consolidation in the same direction as the global trend. If the breakout happens with high volatility, you can be sure that the second impulse is forming, fueled by the energy built during consolidation. This second impulse is your entry point, and its price movement will often mirror the height of the first impulse. The beauty of this strategy is that if you've correctly identified the setup and taken your profit from the first breakout, you can enter a second trade. It means that this strategy provides 2 entry points and both succeed in most trades. I've refined the original approach to make this the most useful strategy in my toolkit. Here's the trick. After the second impulse, the price typically forms a second consolidation. At this point, it's time to bring out the Fibonacci retracement tool. Start by placing the 0 level at the start of the first impulse. Then, place the first level at the end of the first impulse. When drawn this way, the second impulse often ends at the 1.618 Fibonacci level. If the price stops here, it's highly likely to reverse against the trend after a brief consolidation, moving toward the midpoint of the first consolidation. The 1.618 Fibonacci level plays a significant role in price movements. If you're curious about Fibonacci levels and want me to dive deeper into how they work, let me know in the comments. As I mentioned earlier, after the first impulse, you'll often see a continuation pattern. This is a sign of a strong confirmation. When the price breaks out of consolidation, look for candlestick patterns. For instance, a bullish or bearish engulfing pattern at the breakout point is an excellent indicator. Pay attention to candlestick analysis. Long wicks near the 1.618 Fibonacci level often indicate that the price is being pushed back. This is a great additional signal for a short-term reversal and your second entry point. And of course, don't forget about indicators. Tools that signal trend reversals are invaluable here. I personally rely on RSI. For the first trade, ensure the price isn't overbought or oversold. The RSI line should not cross above or below its thresholds. For the second entry, look for overbought or oversold zones at the end of the second impulse. This confirms it's time to enter at the retracement. That's the theory. Now let's move on to the practical side. Take a look at this strong uptrend. It's strong because it's made up of powerful impulse moves with very small pullbacks. As I mentioned earlier, for this strategy to work, we need to find a setup where the price moves in a strong impulse and then consolidates. Right now, the price has hit a resistance level it couldn't break and is now consolidating, gathering strength for the next move. But here's the catch. The RSI indicator isn't exactly on our side. Look at this. Its line is above the upper boundary, meaning the asset is overbought. That lowers the chances of the price continuing upward. But I never rely on just one indicator. If the resistance level that's holding the price back gets broken, I'll enter a trade in the direction of the trend. That will be my first entry point based on this strategy, and there it is. The level is broken, and I'm entering a trade for 5 minutes. Even though the price briefly pulled back to retest the level, our expiration time was just right and the trade closed in profit. Now the next entry point in our strategy is the 1.618 Fibonacci level. As I mentioned before, if you draw Fibonacci lines from the start to the end of the first impulse and the price reaches 1.618, you can take a counter trend trade to profit from the pullback. This is where the RSI indicator will be a great confirmation tool. Look at this. The entire time we were waiting for an entry, RSI stayed above the upper boundary, meaning it was in overbought territory, and now everything lines up perfectly. We correctly identified the impulse, the price stopped at the 1.618 level, and a pullback is expected. So let's not waste time. I'm entering a 5-minute trade. That was a perfect demonstration of this amazing strategy. Now you have another strategy in your toolkit, which means one more step toward the goal. If this video was helpful for you, I'd really appreciate your likes and comments. Let me know if my previous trading strategies have helped you. I'll head back to the lab to prepare more trading content for you. See you next time.